Hey guys, welcome back. Today's episode is going to show you how I play all-time highs and basically what signals me that an all-time high could be in and we could be seeing a pullback. There's specific patterns I look for, such as multiple liquidity cycles in a row and whatnot. I'm going to show you all that. I'm going to show you how I use this to catch 300 pips short on gold. And I'm also going to show you multiple examples on US30 and gold and basically how this plays out. I'm going to talk about how the liquidity cycle plays into this. And I'll show you how I use timings for a confluence to take this short. If you already haven't, definitely subscribe. This will be a pretty cool episode. For those of you that want to learn more about this style of trading, you can check out the new course I just put out. I'll link it in the bio. Alright guys, so let's get going here. So just before I show you the actual trade, let me show you a couple different examples on US30 and let me show you a couple different versions of this. So the first thing you're going to want to look for is an abnormal reaction. When I say abnormal, you could basically say the algorithm switched the sequence of orders. So it'll go from just buy orders, it'll go into a large injection of sell capital. So this usually happens with a candle that engulfs 3 or 4 candles. Sometimes it'll be seen on the 15-minute, sometimes it'll be seen on the 1 hour. So that's the first characteristic. The second characteristic is it'll barely run the high it created last. Like when I say barely run, price didn't do this and then come down. It just it's more of a liquidity sweep. So that's two of the characteristics that an all-time high could be in. The next characteristic I want to see is I want to see liquidity stacked. And then I basically want to see that liquidity get taken out. So for me, a prime entry would have been anywhere in here. US30 didn't give that, so I didn't get to short this. So I did catch gold, which I'm going to show you in a sec, but let's just look at a couple all-time highs that US30 put in. So here would be another one. While you don't get the exact same thing, it's pretty similar. So you put in an all-time high, you barely sweep it, and you get a large injection of capital. Now, I know if I look on the 15-minute, this candle is going to likely engulf anywhere from 3 to 4 candles. So that's got two of our characteristics. The second characteristic is always that liquidity cycle. Take out the inducement low, look for an entry on the imbalance. So this would have been an okay entry. Not super confirmed, but the second liquidity cycle here lining up and this being the inducement low, this would confirm our short. So this would be the actual entry. This is the exact same trade I took on gold on Thursday, 2 days ago here. So I'm going to show you how that plays out. And this happens over and over pretty much on every all-time high. While they might be a little bit different, the concept's pretty much the same. So this one here put itself in. You never got that sweep of the initial high. So price comes down. There's your sweep of the initial high. There's your liquidity cycle. There's your change in state of delivery. One candle engulfs many. So in order for me in here would be fine. The second liquidity cycle is here. So an entry anywhere from this imbalance to this imbalance would be kind of the prime territory for me. This one here really stands out because, as you see, we've created another channel. We've created another inducement into our imbalance. This would be an entry for us. So for those of you that want to know more about the liquidity cycle, I did make a video on it probably 3 videos ago or so. So you guys kind of get the idea here. It's and I think this is really important to learn if you're trading something like indices, NASDAQ, or gold. Anything that's got a potential of making all-time highs. Whoops, wrong chart. So let's go to gold here. All right. And just so you guys know, I'm not quick to reverse. So reversal is always going to be my secondary choice. So even though price did exactly the pattern here, it's a liquidity cycle. We barely took the high. You got a candle that engulfs 3 or 4 candles to the left. I would still buy this. In fact, I did buy this. I ended up breaking even on this trade. It went about 150 pips into profit and broke even. But at this point, I realized it was my secondary bias and we're no longer buying. So how did we put that together? So I'm going to show you a couple of little things revolving timings and the DXY as an extra confluence. And it basically just comes down to reading price. What I mean by that is, here is our liquidity. Here is our liquidity taken out. I would say this is kind of your inducement low. There's your imbalance. So this level holds. One of two things needs to happen here, and for this trade to continue, price needs to basically go up. However, we get something different here. So I entered in here, so I had a pretty good entry, but like I said, I just broke even up here. I never ended up TPing this. In hindsight, I probably should have, because this could have been an area changes. But our second confirmation came here. So liquidity cycle, break of inducement low, mitigation, liquidity cycle, break of inducement low. So we're looking for a mitigation up here. I need another confirmation because I don't like reversing trend. Even though we have a break of the last low that put in the last high, the first break is often a liquidity grab. As I came into the session and price kept printing, I kind of changed my bias from buys to sells. And I'm going to show you kind of where this happened on the DXY, and then I'm going to show you how I put it together with timings. So, for those of you that watched my YouTube on Wednesday, where I basically said we haven't seen the dollar pump yet from Trump surviving the assassination attempt, that was around here. I was expecting the dollar to pump. I don't know what's going to happen until it happens, but you get one internal range, second internal range. This confirms gold sells for us. Why does it confirm gold sells? 2 range breaks is a change of trend. So your pullback and your break kind of tells the story. Let me actually just draw this out a bit better. So this would kind of be your first range here. And it fails to break the low. And from this point on, it actually breaks itself. But it's not just how it breaks itself. It's now looking at order flow. We're now seeing the dollars being protected. None of these lows are breaking, which is telling us there's further upside. So the story begins on the dollar where we took out a weekly low. This is a major liquidity. My expectation is if price does something like this and keeps heading up, we're likely going to take a weekly high. It's just how the liquidity cycle works on the higher time frame. So this would kind of fit my narrative of gold shorts. So, whoops, wrong chart. Back to gold. So, this didn't stay rewound, but anyway, we'll go back to this where we were, and we'll basically show you how price worked that day. So as I already talked about, this break here pretty much started changing my bias towards sells, but it wasn't confirmed until DXY did the pullback in the break, and basically you have 1 range, 2 internal ranges. 2 internal ranges is generally a change of order flow, and from where it reacted from, this kind of changed our bias on gold. So looking at this now, you can see how gold manipulates here. So I come into the chart around here, and now you're starting to see a micro liquidity cycle about to take place, and there it is. And from a higher time frame perspective, why didn't this level hold? There's no imbalance here. price is going to seek out imbalance. So this is what you call a creation. Basically, you're inducing either side. This would be what some of you call a smart money trap. And the idea is you liquidate the lows, you start going up, you liquidate the highs. But this is where we're looking for an entry anyway, because this is the candle that took out the last inducement. So this is where we want to sell from anyway. But you could see the micro liquidity cycle within the macro. And this one was a bit tricky, I'm not going to lie, because you manipulated each side. So you had to look beyond the 5 minute, otherwise you got manipulated by this liquidity build. Whereas if you zoomed out to the 1 hour, you knew you're not looking for a trade until here, which is why I try to get my bias from the macros. So with that being said, the first short came here right away. There's nothing to wait for. I know if price comes above the 1 hour imbalance, I'll be looking for a re-entry. And ultimately, I stack this position. We pull back, we break. At this point, I don't need to cover anything above the high. Now, I was pretty conservative on these. I only went for the daily low because, again, I don't know what price is doing. But obviously, these ones went quite a bit more into profit. So this ended up being about 300 pips combined. Very simple trade, very systematic, and this is just a liquidity cycle playing out. Now, where people get messed up with this is they sit on the 1 minute and the 5 minute and they'll say it doesn't work, whereas I'll try and find it on the 15 minute and the 1 hour. And the idea for me would be to carry this out on a higher time frame. So if we look at the 4 hour on gold now, you have a similar scenario playing out. And you basically have another liquidity cycle here. Your inducement lows here. That one never got taken out. You got another channel here. I would say your last inducement came from here, meaning this candle broke us. So if price came here and started kind of going sideways, I would likely target right down into here. So my expectation right now is for gold to either react here or here, pull back, take out all of this liquidity, which is a lower time frame liquidity cycle, and likely continue. If this shows us continuations down, this would be my target. If this low holds and price does something like this, then I know the big boys are seeking higher prices. But looking at it from a macro perspective, I see more downside on gold with likely a few bullish days. What's going to confirm this is a proper reaction. So you can see here, we've already started our channel. I need a proper reaction. So this is actually where I was looking for a long. However, the DXY wasn't pushing down, so I just didn't take a trade yesterday. I stayed out of this, and it's a good thing I did. The market didn't do anything yesterday. But we have our channel. There's a possible reaction here, or there's a possible reaction at 24.91 roughly, which is another daily low here. So my expectation would be either price goes up here, and in which case I would look for an entry here, and I would look to run all of this liquidity cycle. And depending what price does, in a perfect world, price would build a liquidity cycle here, take out the inducement low, in which case we would look to sell. So it's all reading how our liquidity stacked. The easiest ways to see them is as channels. The reaction has to come from a higher time frame imbalance zone or a higher time frame liquidity. So again, these stories don't mean nothing off the 5 and 15 unless you can tie the 1 hour, 4 hour daily into it somehow. And ultimately, this is how I trade. This is how I'm able to know that this is sellable even though price is still bullish. The market will stack liquidity in a way where it's put there to be run, and again, it's the same pattern over and over. I would say between US30 and gold, they each do it anywhere from 2 to 4 times a week. So it's not going to give you a trade every day, but it's going to give you trades most days. They're high probability trades. And it's like the simplest pattern in the world. Like if this shot up, created imbalance, I would look for an entry on this imbalance and I would take out this whole channel. Then I would look for price to react here because this reaction came from a Trump speech, basically saying how bullish the dollar is going to be, how he's going to cut taxes. So if I get a proper reaction here and on the way up you build some kind of channel, I would look to take out the last inducement and you would ultimately target all the liquidity belt and the cycle starts all over again. So this is how I trade. While the trend is important, the range direction is important, it's also important to see which way liquidity is being stacked, because sometimes it's being stacked counter range direction, and that's when you know it's safe to go the other way or it's higher probability. Anyway guys, I hope you enjoyed this trade. I will see you in the next one.